Traders, hello everyone. Welcome into our channel. We'd first like to apologize for not uploading some content the past few weeks. We had some minor technical issues, so now I think everything is fixed, so we can proceed with our working. So we spend most of our time with the VIP group and the other free Telegram group, where we've been assisting a lot of traders to make some money, to giving out our technical strategies to all our traders. So if you happen to be part of, if you happen that you are willing to be part of our Telegram group, which is our free group where we daily feed profitably signals on trading the synthetic indices, make sure that you click the link in the description below this video. I think it's at the bottom where you will find our Telegram link. If you can't find our Telegram link, you can comment. We'll give you our Telegram link so that you join the other community. And also, if you are still new in trading volatility indices, you can use our link in the description below to open your live account. Another thing, we are also a payment agent, Votela Technologies. If you log into the portal, you'll find our details there as a payment agent. Mostly for our international clients, we request you to use WhatsApp for communicating with us, or you send us an email. We will respond as soon as possible. So let's get to business, ladies and gentlemen. Today I want us to talk about the volatility 50 1S index. That's a very volatile index. I want us to discuss the brief technical part of this index on how to master its move so that you can be profitably in your trading. Okay, for the first thing one have to do, if you want to master the volatility 50 index, we will all know that in the market, always we first identify what we call the trend. Okay, let me remove this. In the market, we all know that there are few things you need to identify. First of all, you need to identify the trend in the market. You need to identify the trend. That's the first thing. Secondly, you need to identify the zones. Know the market is resting on which zone. So the third thing you need to do in the market, you need to see where the strength of the market is. That is what we call the impulse and the corrective wave. The impulse and the corrective waves. So there are three major things you first need to identify in the market. So if you want to trade the volatile indices profitably, not losing your funds, you need to be able, whenever you open your chart, be able to identify the trend, be able to identify the zone, be able to identify the impulse and the corrective waves. So in that case, you'll be able to see when to buy, when to sell. Okay, another thing, if we talk of a trend, the trend, we mean, is it an uptrend or a downtrend, or the market is consolidating, meaning the market is currently moving sideways. You should be able to see where the trend is going. Another thing, you need to see the zone, the support resistance level zone. Where is the market currently? Where has the market rested? Where is the strength of the market? Lastly, see the impulse and the corrective wave. Many traders, they tend to buy at the end of the impulse. You find that now the market is going to make a corrective wave, the reversal, and somebody with a very small account will lose all his funds because you didn't identify the impulse. So in this case, I will just introduce to you the three basic steps you first need to see whenever you are you want to trade volatile indices like the V50. So first things first, what you're gonna do, I will use my cell phone for today because about 70% traders, they use their cell phones to trade. The first thing you need to do, you need to go to the higher time frame. Higher time frame in this case, I don't encourage you to use the weekly time frame, but I encourage you to start on the daily time frame, where you need to identify the trend, identify the zones, you identify the impulse or the corrective waves. You see here, for instance, this is an impulse, the corrective. Now we are expecting another impulse and a corrective impulse. You see, meaning according to the daily time frame, the V51S is currently undergoing the corrective wave. It's at the corrective wave momentum. So if we go to the 4-hour time frame, you see, if you go to the 4-hour time frame, you see what you're gonna see. You see what we saw on the daily time frame. It's still accountable in the 4-hour time frame, because here is the impulse, here is the corrective wave. Now we are expecting another impulse, which is a downtrend. You see, then later there will be a corrective, so forth and so forth. So let's first do like this. For the sake of time, I will upload another video where I will talk about the zones, and I will talk about the impulse in deep detail in corrective wave. But for now, let's stick our minds onto the zones. The trend. The market, let's look on this impulse wave. Okay, let's look on this corrective wave, this one. Okay, let's look on this impulse and the corrective waves, the two. We will look on this one and also on this one. Then we are done for this video, and I'll upload another video where we'll talk about analyzing the volatility 51S on the part which is going to be part 2. We will look on the zones and the impulse corrective wave respectively. You see, let's start here. Okay, let's start here. You see, whenever you begin trading in the market starts at a lower price. I'll use a 0 as my mark, as my main mark. Then the price moves higher than the lower, which is the 1H, that's higher. As the price progresses with its momentum, it goes to open another higher price, which is high than the previous high. You see, another higher price, another higher price. You see, so in this case, if we see the candlesticks going, if we see the candlesticks opening a new higher price than the previous price, we see that the market is currently on a bullish momentum. The trend is going long. You see, then what we then do, we draw our respective support resistance lines. You see, we draw our support resistance lines. For instance, the price has been moving high here, which is an impulsive wave. But when the price is making the corrective wave, the previous resistance level, the zone, that's where the price gonna rest and create another support level. You see here, the price did move higher and then corrected the wave here up to this zone, and then another higher price. Okay, I made a mistake somewhere. The price move higher, correct, higher, correct, higher, correct, higher, and correct. You see, this is the merger zone, the support zone, which is gonna be a resistance level. But when the price decides to break out this zone, because the price will then decide, no, we need to break this thing out, decides to break here, check once again, the price will then come and retest. It's still a downtrend. This level has been broken, which makes this an impulse and a corrective. So now we are aware that because here it's been a support, and here the price has been broken, here it's going to be a resistance level. And now the price is expected to go down, take another impulse. Simple as that. That's when we identify the entry on the high volatility indices. And this strategy is a technical analysis strategy that will help you make a lot of money without any stress, without being confused by so many indicators. Remember, I've never talked with an indicator currently. So in this case, after you see that now the price is retesting this, support, which is now gonna be a resistance level here, where there is the purple color. It started to be a resistance level. Now the price is about to go down to make another impulse. You see, so we then go to the 1 hour time frame. When we go to the 1 hour time frame, you see the price has created, that's the higher price, that's the higher low, and the lower low, the higher low, the lower high and the lower low, the lower highs and the lower low. That's when you need to identify this is the higher highs, This is the lower than the previous high. This is lower than the previous low. You see, that's when we need to we need to identify the impulse and the corrective, so that you don't find yourself selling while the market is correcting the wave. You need to sell when you see the impulse, not the corrective wave. So, ladies and gentlemen, you then go to the smaller time frame, because at the end of the day we want entry. Here is the impulse and the corrective. The impulse, the corrective wave. We want an entry. You then go to the 15 minutes time frame. You see the impulse, the corrective. The impulse is smaller in this case, and the corrective, we're expecting a very long impulse. You then go to the 5 minutes time frame. You see, you won't make any mistake if you know the 3 levels of the market. So, ladies and gentlemen, thank you so much for your time. We will upload another video explaining the other 2 main components of the market that one can use to analyze the market and get an entry. For more information, check our description in below this video, where you'll open your live account and open and join our Telegram channel. Make sure that you also don't suffer if you can't make a deposit to your Deriv account. We will assist you as a payment agent. Thank you. Let's meet in our next video. Bye bye.